the worst case scenario for an insurance outcome?
LA bushfires resulted in an enormous number of claims on the FAIR plan and reduced so the government's reserves by about $1 billion.
The average insurance loss per structure, the stats are saying, is $1.9 million. The total property loss they're estimating to be in excess of $100 billion. A huge portion is uninsured loss.
Having to learn from that terrible ordeal can probably also be framed this way: the anatomy of a catastrophe. And you map that through. You start with before, during and after the incident. And using the LA bushfires as an example, historically in that insurance market, insurers had always been able to reserve in accordance with their various forecasts and modelling for wildfire risks in that state. None of that modelling predicted the extent and penetration of this particular wildfires and how much damage it was going to cause and how difficult it was going to be to control. The flip side to that is that whilst prior to the bushfires there was a fairly high level of insurance coverage, a number of the main suppliers in that market started to either curtail or cancel or withdraw their products from that market literally months before the wildfires hit in January this year. There has been an undeniable increase in the impacts of natural disasters around the world in their various forms, and they're normally threefold. And so invariably you get a tension between the insurer's need to cover cost and make a profit, and of course the lever for that is increasing premiums.
Right.
And the ability of the consumer, policyholders, to keep up with those premium increases. But there's also another facet to it, and that is that even where that balance can be struck or continue to be struck, when there is a disaster, the costs to insurers of reconstruction, cleanup, compensation, etc., have gone up exponentially. Bottom line, it's just simply not profitable. The risks are too great and too expensive for what can be generated in terms of premium revenues. Now, that incident and the domestic insurance impacts had a reverberation around the global insurance market, particularly the reinsurance sector. So much so that pressures on reinsurance costs now are expected to be felt right around the world, including Australia, notwithstanding the fact that as at the end of last year, reinsurers globally estimated to retain capital reserves of approximately $750 billion US.
Wow.